It's Thursday, the 1st of August 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1, slightly weaker than expected inflation figures have alleviated fears of another interest rate hike and raised hopes of a cut early next year.
Or even earlier, investors and the consensus among economists is that the next move in interest rates is definitely down, maybe late this year, probably early next year. Bureau of Statistics data released yesterday shows that inflation for the June quarter came in at 1%. For the year, it was 3.8%. The all-important trim mean, which takes out all these volatile items, the thing the Reserve Bank likes to look at, it came in at 1% for the quarter, 3.9% for the year, slightly lower than expected. With the Reserve Bank board due to meet next week to deliberate on rates, any number higher than 4% would have put pressure on an interest rate hike. That didn't happen. Housing, including rents, is driving prices up higher, so too stuff like health and general insurance, as well as education. Some of the heat's come out of services inflation. That is good news. As a result, 3-year bond yields fell. That means people think interest rates are going to fall in the future. The Aussie dollar also dropped as a result.
Sean, do you think the Reserve Bank will be relieved by yesterday's inflation figure?
Yes, I think so. Inflation remains too high. It's sticky, so to speak, but further rate hikes could well tip the economy into recession, and that's not what the central bank wants. While the employment market has remained remarkably resilient, unemployment is definitely trending higher. There's been a sharp slowdown in the retail sector and in the construction sector. The number of insolvencies hit a record last financial year. In fact, on a per capita basis, we are in recession. The number we got yesterday, though, gives the Reserve Bank a reason to not lift interest rates, and they'll be happy about that.
All right, on to story number 2 now. And national home values rose by 0.5% in July. That is the 18th consecutive month of increases, and prices are more than 13% higher than early last year. But, Sean, it isn't all good news.
That's right. The Australian market is pretty much split in two, Perth, Brisbane and Adelaide, where there isn't a lot of stock available. Their prices are soaring. Melbourne, Hobart and Darwin, where there is plenty of stock available, well, their prices are struggling. Sydney is sitting somewhere in between. House prices fell during the 3 months in Melbourne. In Sydney, they're up just 1%, much slower than the 5% pace this time last year. CoreLogic's research director Tim Lawless says its clear momentum has come out of the market in most cities. What's interesting is affordability problems are really kicking in. The fastest growth across the nation over the past 3 months comes from the lowest quartile of house prices, the cheaper homes, and unit prices are now rising much faster than house prices, suggesting that affordability is playing a role there too.
Story number 3, Rio Tinto made a net profit of nearly $9 billion over the 6 months to June. But rather than boost dividends to shareholders, the country's third largest miner is going to spend more on growth projects.
The $5.8 billion US dollar profit was close to expectations and up 14% on a year earlier. It was driven by improved earnings in its copper and aluminium operations, though its iron ore business remains the dominant breadwinner. Boss Jakob Stausholm said the company was consistently very profitable and growing. The dividend of $1.77 US a share was slightly lower than expected, though it's still the 4th biggest interim dividend in the miner's 151-year history. Analysts said it basically hints that the miner is investing more rather than giving it back to shareholders. Its share price closed up 2% yesterday.
Story number 4, about 600 jobs are at risk at troubled airline Regional Express after the company's shares were suspended yesterday and flights cancelled between capital cities.
Workers were told the business that services 737 flights in capital cities will cease to operate. 360 jobs will go there. Another 250 jobs are at risk on regional routes, according to the AFR. Both Qantas and Virgin have committed to pick up as many jobs as possible. Federal Treasurer Jim Chalmers has stopped short of agreeing that the government should take an equity stake in Rex. Others in the industry said the crisis at the regional airlines should be a catalyst for reform. For example, the boss of Sydney Airport, Scott Charlton, said the demise of Rex demonstrates that we need to change some things in the Australian aviation market for competition to thrive because recent history suggests the barriers are too high.
Last one, Sean. Story number 5. The crisis in the Middle East is escalating after Israel said it had killed a senior Hezbollah commander in an airstrike on Beirut and is suspected of assassinating the leader of Hamas in Iran.
Israel said the operation in Beirut was retaliation against the individual responsible for a deadly rocket attack on the Israeli-occupied Golan Heights last week. The Israeli Defense Forces said that the leader was Hezbollah's most senior military commander. It marks the first time Israel has targeted a Hezbollah figure in Beirut since hostilities erupted between the two sides after the Palestinian militant group Hamas launched its attack on the Jewish state on October 7. Now, yesterday, the leader of Hamas, Ismail Haniyeh, was assassinated in Tehran. No one immediately claimed responsibility, but suspicion fell on Israel. A Hamas official said its chief's assassination is a cowardly act that will not go unpunished. Both incidents come as the US continues to lead diplomatic efforts to de-escalate the situation. That ain't working at the moment.
Indeed. There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Thursday, the 1st of August, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts, or check out the new episode of our sister podcast, How Do They Afford That? All about making your money work harder for you. This week's episode is looking at a whole bunch of different debt repayment strategies. You can find that wherever you listen to podcasts, and I'll put a link in today's show notes as well. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.